Our next guest is a Ford bear. He downgraded the stock to a sell earlier this month on the back of earnings. Emmanuel Rosner is the lead auto analyst at Deutsche Bank. Emmanuel, great to have you with us. Since the earnings, which I characterize as terrible, just briefly, we've had a number of incremental bits of news from Ford. I'm wondering how, if at all, this changes your perspective on the company.
Yeah, hi, Melissa. Thanks so much for having me. Absolutely not. We downgraded Ford to a sell rating a couple of weeks ago after the earnings. What's extremely clear in our view is that this turnaround is not on track. The fact that there's a cost disadvantage at Ford versus GM and certainly versus Tesla is not in dispute. Obviously, even Farley admits that. The question, are they having some traction fixing this? And it looks like it's not. They obviously had profit warning in the third quarter. They also missed their own guidance in the fourth quarter, which they had reiterated. And now they're calling for flat earnings in 2023, which would require them to have $3 billion of savings just this year with zero evidence that it's actually going in the right direction. They also need to invest in electric vehicles at the same time. So any fixed cost savings they can get on combustion engine, they would have to reinvest in the electrification where they are behind some of these rivals. So we think it's absolutely not on track. We downgraded to a sell, and we have a price target of $11.
In terms of some of the manufacturing efficiencies they're trying to reap, Emmanuel, they talked about moving to large underbelly castings in order to make the manufacturing more, easy and efficient, and that's kind of what Tesla has been doing for some time. How long does that take? I mean, I would imagine this takes years. These are processes that need to, change not overnight, but over the course of years, particularly when it comes to retrofitting factories.
Yeah, absolutely. This is the crux of the issue. When you look at what Ford quantified at $7 billion cost disadvantage, it's about $3 billion in the bill of materials, $3 billion in manufacturing, and $1 billion in warranty. None of these buckets will be quick to fix or even cheap to fix. Manufacturing takes a long time, as you just said. Bill of material, the suppliers are still seeing some cost inflation from labor, from energy. They're not giving any, cheaper prices here. And then warranty, when you look at initial quality survey, Ford did not rank well. And it takes years to essentially be able to improve, quality of vehicles. So when we see Ford saying, well, we have an $8 billion opportunity, absolutely. Well, we're going to get $3 billion of that in 2023. I think that's going to be extremely difficult, especially on the back of a year like 2022, where the cost actually went up rather than down.
Emmanuel, I admire your call. By the way, that's been the right call to have for a long time now. Every rally's been sold in this name. But what do you make of the announcement that their partnership with the Chinese battery company here in the United States? That seems fraught with political backlash. What are your thoughts on that?
So even before, looking into the political backlash, I mean, this is the right move, as in Ford needs to have battery capacity in the U.S. You will benefit from government incentives. It's also the right thing in order to be cost competitive when they try to sell electric vehicle. The issue is they're so far behind, it will take years to ramp up. So GM is already producing batteries in the U.S., in Lordstown, Ohio. Ford will be starting to ramp up their own U.S. batteries only from 2025, 2026. And then these other plants would come, even after that. So we're talking about a fairly major lag, a fairly major disadvantage in terms of cost. So even if all plays out well, you would actually put them in a better position 3, 4, 5 years out rather than right now. And that's before even considering some of the political consideration.
Emmanuel, last quick question here, and that is, as Ford is trying to become more cost effective in their manufacturing and close that gap that they have in terms of the disadvantage, prices theoretically should be coming down at the same time. So do they get squeezed?
This is our fear for actually all traditional automakers here. There's some cyclical pressure that's likely to come. Earnings for traditional automakers at all-time high because vehicle prices are at all-time high. The consumer is not getting squeezed. Affordability has gone, worse, and interest rates are going up. It's not unlikely for car prices to stay this high. So we worry in general about the cyclical backdrop. We worry about Ford assuming that their prices will be flat this year, which seems like an unbelievably aggressive assumption from an all-time high starting point. And so, yeah, I think there's going to be cyclical pressure. But even on the relative basis, assuming everything stays steady and the prices do not come down, we feel like Ford is essentially at disadvantage versus GM in terms of its cost structure. but also in terms of its valuation. It is more expensive than GM on 2023 earnings, which is very hard to explain, in light of all the stuff we've discussed.
Emmanuel, thanks for your time. Great to see you. Emmanuel Rosner. Jeff Mills, it is rare on Wall Street for an analyst to put a stock at a sell rating.
Yeah, but I think it's appropriate here, and we almost have that same price target. I mentioned 1060. Emmanuel said $11, and I think there might be sort of a gravitational pull toward that level, just because, again, I don't know how patient investors are going to be with these cost-cutting efforts. You have other areas of the auto sector that are a little bit more profitable. I think that's key in this type of market. So my guess is it's a difficult slog here going forward. And maybe to go back to the first question you asked me, thinking about it from a trader's perspective, so let's say over the next quarter or so, I think you don't really have any catalysts relative to a Ford, where looking at Tesla, I think that might be a different story, and it's at least possible that you could trade to the upside of that range I mentioned with Ford. I don't know that that's the case.